Traders, the Nasdaq just gave us a crystal clear roadmap. And if you don't understand the levels we're about to cover, you'll miss the entire next big move. Forget random indicators. This is pure market structure, the language smart money speaks. In today's video, we're breaking down the Nasdaq. I'm going to walk you through the macro market context driving sentiment this week, the key levels you absolutely need to watch, and the hidden order flow and liquidity traps sitting just above and below price. We'll also map out both the bullish and bearish scenarios, so you know exactly what to prepare for. This is going to be packed with insights you won't want to miss, so stick around till the end. Before we dive in, hit that like button, smash subscribe, and turn on the bell icon, because you don't want to miss the updates when these levels play out in real time. Macro market context. Before diving into the Nasdaq chart levels, let's step back and frame the bigger picture. This week carries significant weight for financial markets, as multiple key economic data releases and central bank events could directly influence price action. On the data front, traders will be closely monitoring the Philadelphia Fed Manufacturing Index, as well as the S&P Global Flash PMIs for both services and manufacturing, giving us a real-time pulse of business activity and economic momentum. We'll also get updates on existing home sales, which provide a vital read on consumer strength and housing demand, two areas that have been sending mixed signals recently. Beyond the data, markets are paying special attention to the Federal Reserve speakers scheduled throughout the week, with Atlanta Fed President Raphael Bostic among those set to share insights. However, the spotlight event is undoubtedly the Jackson Hole Economic Symposium, where Fed Chair Jerome Powell will address the economy and monetary policy. Historically, Jackson Hole has been the stage for major policy hints, and this year is no different. Investors are laser-focused on any clues about the Fed's next moves regarding interest rates, especially against the backdrop of stubborn inflation pressures and a labor market that remains resilient but uneven. In short, this week isn't just about technical levels. It's about how the intersection of macro data and Fed policy could act as the catalyst for the next big move in the Nasdaq. With this backdrop in mind, let's now zoom into the charts and identify the critical levels that traders must watch. Key levels, structure, why they matter. A. 22,800, the must-hold. Why it matters. February 2025 swing high. Price was rejected here earlier in the year. When we finally broke above 22,800 in July, that was a bullish break of structure on the daily. Early August, price tag 22,800 and bounced, proving it as new support/demand. What it means now. As long as 22,800 holds on a daily closing basis, the bullish daily structure remains intact. A clean daily close below 22,800 would be a change of character, shifting from uptrend to neutral/bearish and unlocking lower targets. See downside path. B. 23,300 to 23,350, near-term support/liquidity shelf. Today's L 23,334 tagged it. Equal/near equal lows here equals sell-side liquidity. A quick dip under 23,300 that reclaims 23,350 is a classic bullish sweep. C. 23,900 to 24,000. First ceiling. Round number magnet plus recent supply. Expect initial seller reaction. A daily close greater than 24,000 puts the all-time high at 24,068 squarely in play. D. 24,068. Current swing high/all-time high. This is the line with resting buy stops above. A clean break can squeeze price in blue sky conditions. No historical supply overhead. After a breakout, look for a retest of 24,000 to 24,050 to hold as new support. E. 22,000 to 22,200. Next big shelf if 22,800 fails. Why it matters. Prior June/July consolidation base. Big round number. Likely resting bids and stop clusters. If we close below 22,800 and can't reclaim it, 22,200 to 22,000 becomes the next high probability magnet. Order flow and liquidity story. Smart money lens. Below price, downside liquidity. 23,300 shelf. First pocket of sell-side liquidity. Equal lows/today's low. Sweep zone, 23,200 to 23,300. Watch for wiki flush plus quick reclaim, classic spring. Critical pull, 22,750 to 22,850 around the 22,800 anchor. A clean daily close below 22,800 often triggers for selling toward 22,200 to 22,000. Above price, upside liquidity. 23,900 to 24,000. Clustered stops above a round number shelf. 24,068, all-time high. Major stop pocket. A break often produces a fast expansion. Manage with a trailing stop once we're above 24,100 to 24,120. Order blocks daily. Demand OB. 22,900 to 23,050. The last down/indecision area before the push toward 24,000. First test often produces a bounce. Supply OB. 24,200 to 24,350. Last up area before the current sell-off. Expect reaction on first revisit. Imbalances/FVG daily. 23,000 to 23,200. Mid-July impulsive leg left a thin zone. Markets like to revisit and balance these. 23,950 to 24,120. Early August pop created a light zone that can act as magnet/resistance on the way up. What if scenarios clear triggers, targets, and validation? Bullish path. One sweep and reclaim long. Flush 23,200 to 23,300. Then 1 hour/4 hour reclaim 23,350. Targets 23,900 to 24,000. Then 24,068. All-time high. Post-break idea. If all-time high breaks, look for a retest 24,000 to 24,050 to hold. Manage into round number magnets above, e.g. 24,100 to 24,150, then trail. 2 break and retest long. Daily close greater than 24,068, then a controlled pullback holds 24,000 to 24,050. Trade the blue sky expansion with a trail rather than fixed targets. Invalidation. Lose 23,950 to 24,000 on closes after the breakout. Bearish path. 1 lose the shelf test the anchor. Daily close less than 23,300. Follow through into 22,800. Weak bounce/failure to reclaim 23,000 to 23,100 keep sellers in control. Targets 22,200 to 22,000. Invalidation. Swift reclaim greater than 23,300 bear trap. 2 change of character confirmation short. Daily close less than 22,800. Then retest 22,800 to 22,900 as resistance. Targets 22,200 to 22,000. Stretch 21,600 to 21,800 if momentum accelerates. Invalidation. Daily close back above 22,900 to 23,000. Let's putting it all together. The trend from April 16,600 is still up, but we're in a pullback probing liquidity. Near-term battle, 23,300 to 23,350 liquidity shelf. Structural line in the sand, 22,800. Must hold to preserve the daily uptrend. Upside gates, 23,900 to 24,000, then 24,250 to 24,350. Stops sit above both. Plan like a pro. Wait for either a sweep and reclaim long from 23,200 to 23,300 or a clean daily close plus retest around 24,000. If we lose 22,800 on a daily close, switch to defense/short the retest. Risk note, on NQ, 1 point is almost equal to $20 per E-mini contract, so a quick 30 points is $600. Size down, set hard stops, and don't chase wicks. If this breakdown helps sharpen your view of the market, make sure you drop a comment with your favorite level and why. Don't just watch the market, understand it. Like, subscribe, and turn on the bell icon for more deep dive market structure secrets that could change the way you trade forever.